Zoom right now to tie it all together. Happy Tuesday. Welcome back, Daily Profit Plan. Let's get started. All right, coming in hot. Okay, market's up. Pre-market, another kind of big gap to the upside. Again, we'll see what that looks like for the remainder of the day. It was overall pretty quiet yesterday. Stayed inside the expected move. All right. We should be streaming on Zoom. We should be streaming on multiple YouTube channels, on X, Facebook. What is happening? Let me get the restream down here. Chat's up and running. Okay, we're good. Zoom. Okay. Screen. Share. Go. All right, good morning, everybody. Happy to see everyone in Zoom and on YouTube. Good morning, Donna. Cold and windy Michigan. Chilly, Wisconsin. North Idaho is freezing. All right. It's going to be like 66 here in the old Salt Lake City area. I'd say that Middle of California is pretty nice last week or last weekend. Lower Midwest. Music City, what's happening? Hey, Walter, good morning. Good morning, Mark. New York City says Leslie. All right. What? Stephanie, 72 mile an hour winds last night. Yikes. Spring Lake in the UK. -2 in Iowa. Oof. No, thank you. 74 on Saturday. Wow, what a big swing. All right. Smith, good morning. Maria, good morning. Catherine, good morning. Chat is open for everybody. All right. Good stuff. Okay. Quick review from yesterday. Daily profit play. Nice winner. Here was our day. Let me get up a couple of workspaces here. So I sent this out in Telegram yesterday. You know, we had a pretty big discrepancy between Thinkorswim and Tasty Trade yesterday. Tasty Trade showed pre-market. And again, I'm not saying it's right or wrong. I just played the safer side. You know, with the same thing this morning, we have a huge gap to the upside, 1.08%. I mean, the only thing I really attach to this is that Mag 7 is being bought up right now. That's literally it. Like Microsoft is like the only Mag 7 that's not performing well, but like Tesla's up, Google's up, Nvidia's up. And again, those are all big enough stocks. And I've said this, if we're going to try to hit all-time highs, we probably have to have the Mag 7 go with us, or at least having the top 10 stocks to go with us. So here we are again, overnight flows, 1.07 to the upside. We're going to have another big gap. We'll get some pre-market action here, but this was our level. These are levels yesterday. Sell strikes around 67.45 or 67.75. Where were our strikes at yesterday? Let me look at Telegram. I just know they were full winners. Thinkorswim 41. Okay, yeah. As I said, I mean, there's no. Where was our level in? So my 20 wide never got filled. 67.45. Yeah. So we were right up in this area, you know, with gap and expected move. You know, we use that kind of 50 mark. We acknowledge that, you know, it could have been tested a little bit to the upside, but it wasn't. There was a late day test here right around 3 o'clock. This is a surge at 3:05 and 3:10, faded right back down. On a big positive note yesterday, engineered options squeaked out a net winner. We literally had the market go within just a couple of points of a break even, not even points, like cents of break even. And our break even trade won, and our participation trade did not, but we netted out profit from last week, which again, I can't emphasize how nice that is, considering, let's go this chart, bring up a couple more workspaces, considering the markets were down, you know, to end out last week. So here is your S&P on the weekly candle. So even with this candle last week, this massive wick to the north and this big red body, we still made money on engineered options. So it's not a bad thing. Just let the market duke it out. And, we're coming in close to a couple of key support levels. If you look at the SPX here, opening bell, closing bell, we're going to gap up again today. I wouldn't be surprised, and we don't have a ton of major U.S. news this week. We have a lot of central bank news, a lot of rate decisions this week. But the 200-day moving average is right here around 60. Let's see what the exact value is. Around 65.95, 65.92-ish. We're going to be gapping higher. Now, we do have FOMC tomorrow afternoon with press conference. Nothing's expected to happen. It should be a rate pause again. And I don't think there's really any major change expected until like September this year. That's interesting. What is that? China issues warning Trump is upcoming trip delayed. Okay. All right, whatever. I don't want to watch the news. I was going to go to the watch tool for the Fed. So this is for tomorrow. Expected to stay the same at 3.5, 3.75. That's the Fed target window. Here's the probability. Again, lots of pauses. They might start getting a little bit. Well, there was a September anticipated cut. Now it looks like they're not doing anything until late this year. And all this is subject to change, probably with the fact that oil prices are $95 a barrel versus 60. But it is what it is. We'll see if this Iran conflict de-escalates a little bit, or if oil prices calm down a little bit. If not, expect some stickier readings when it comes to next month's CPI. We can be told that it's transitory. That kind of backfired in 2021 and 2022, right? So anyway, not much happening from the Fed side, even with Powell stepping down at some point, probably May, even with Warsh stepping in. There's still maybe some drama around that Fed probe. I don't know. But nothing's expected to change. So possibly just pausing all the way through the end of the year. I think it's going to be up to inflation. Here's a third-party kind of real-time reading. Let's get a little trueflation here. That's a big jump, 1.52. We were down below 1% not that long ago. Here you go. We were down to 0.67%. Now it's up to 1.5. That's another big jump. So inflation is pretty wild. Our government numbers are not going to reflect this. They're not going to have that type of extreme swing. But a couple things, this downtrend was reflected in the last couple of CPI prints. Not much, but was reflected at least, to the same number that was forecasted or slightly lower. But now that we are seeing this go higher, question, of course, is, are we going to reclaim these highs at 2.5%? What are the biggest sticky points of inflation for the U.S. And probably the world, but the U.S., food and energy, which is why we have core CPI and core PPI, because it excludes things like that. So anyway, all right, what do we got? Nice win yesterday. Yes, range looking more reasonable on SPX today. You'll take a look at that. Thinkorswim, 41 points. Sector rotation moving on to Mag 7. Not necessarily. I feel like things are coming back into Mag 7. Take a look. I mean, the fact that we have another 1+% gap to the upside today, either this is, pump it up while you can. Let's go up about 1.12% from the close yesterday. 1.12%. I mean, that's way up here, man. Look at this. This is taking out that gap. Could there be some drift to the upside? Yes. I respect the fact that, yes, we have a higher VIX still, but that's two strong pushes to the upside, and it's kind of a move that I want to fade. I mean, call me old-fashioned, but when the market's going to gap up 1+%, I'll take the expected move, and I'll fade that all day. If there's going to be more thrust to it, I mean, the market breadth is pretty bad right now. S5FI, this is stocks above the 50-day moving average. This is terrible, by the way. Look at how bad market breadth is deteriorated. So, even when we had this rotation away from Mag 7, market breadth was around 60 plus percent of stocks in the S&P above the 50-day moving average. Now it's down to 32. Okay. What would be insane to me would be this deteriorates down to like 10 and we're still sitting just a couple percent away from all-time highs, because that would be, a rare but incredible buying signal. Um, Gosh, it'd be nuts to see that. But this is terrible market breadth, by the way. So we're showing only 32% of stocks above the 50-day moving average. It's showing that less than half of the stocks are above the 200-day moving average. And in the NASDAQ, 31% of stocks above the 50-day moving average and only 45% above the 200-day moving average. So, I mean, on paper, it's not showing a lot of promise out there for most stocks. But like I said, what is getting a bit of a bid this week? Probably some of the biggest companies in the world. We are up a little bit pre-market again. Take a look at the individual ones. Apple is up. Amazon is up. Broadcom is up. Google is up. Meta is down, but Meta had a pretty big jump yesterday. I think it was up 5 or 6%. So the close from Friday, it was up about 3% yesterday, giving back some. Microsoft up a little bit pre-market, not a ton, 5 cents, no big deal. We'll see if we can carve out a low here around 380 on Microsoft. Nvidia 184, another $1.70 on Nvidia. Still pretty choppy, hasn't broken the 170 handle, hasn't broken the the 195, the 200 handle. Recent all-time highs are on the 212 level. So still very indecisive. One thing that traders can be watching for as far as Nvidia price action would be a break above or below, right? So if we get above this area or back below it, I mean, a break above, sure, we could head up to recent all-time highs. If we hit the same level and reject, more noise and probably another reset for the markets. But right now, I would say Nvidia is probably your front runner carrying the torch of why this market's heading higher. We can try to look into, oh my gosh, is there something else happening? Are we de-escalating in the Middle East? Not really. Take a look at SPX chart. We did have some ADP numbers this morning. I saw they were weaker than forecasted. Let's go to the news. ADP weekly employment forecasted. Actually, I didn't see a forecast. I just saw previous was about 15K. 15.5 revised down to 14.8. And there was no forecast, but 9K came out. So, I mean, I've heard some interesting macro analysts talking about, they're watching more ADP weekly numbers versus watching the monthly non-farm, just for a little bit more trustworthy numbers, I guess. Just a little bit more in the know of like, hey, this is happening every single week. We get a data point. Are we making any jobs? Right now, I mean, break even for the job market is around like 20K, a month, I guess. So if we're doing this per week, I suppose that's enough. But we know there's an interesting labor market. We know it's softening. We know there's a lot of tech layoffs. We know that AI is out there, and possibly one of the most disruptive but biggest breakthroughs we've seen in a long time. All right. So I mean, I think Nvidia is kind of leading the charge here for this run to the upside. I don't really see anything else that's causing this type of rip overnight. Oil prices. Oil price is still around 95. This is a daily time frame. You go smaller. Okay. I mean, this will be an interesting read. Big surge. Is it going to do something like this? Just kind of the volatility cools down a little bit in oil, and then everyone's waiting to know, like, what's going to happen? We go in this way, we go in this way. I don't know. Oil is not something that I want to sit here and jawbone. I just want to watch it. I hope oil prices go down for the sake of inflation. But obviously, set your alarms at $100. Set your alarms at $105. Anything above that, it's probably not a good thing. Anything below that, okay, we can live with it. But nobody likes oil prices these high, except those that want the biggest profits. But you're going to cut off a lot of production, and I don't know, it's just too expensive. So whatever, it's just inflation rears up again, and that's the threat. If oil prices stay sticky, inflation is going to get sticky, and there's a big jump right there. So that's real time inflation going from 0.67 all the way to 1.5%. So much more dramatic change to what we're seeing in the monthly CPIs. I'm sure once we get into April's trading, you're going to reflect those CPI, PPI numbers for March. I'm guessing they're going to be higher. That would be your kind of one-time oil shock. The way they might spin that is that, oh, it was just that. It was just a one-time shock. The markets are settling back in. Look at oil prices, blah, blah, blah. But if we're hanging out between 90 and 100, that's not solving oil. If we're over 100, not even close. We'd have to be probably back down sub 80 for the markets to take this as like, okay, oil prices are a little bit more contained. But so I'm just saying on a positive note, we've got to be below 80. On a sticky note where nothing really changes, just elevated volatility, we're right here in the 90s. Anything over 100, not good. Okay. Gold. Gold still watching that 200-day moving average, which is well over 600 bars. Will we come back down to find some of my moving averages? Possibly. Will we just come down and test the same low around 4,400? Maybe. 4,200 is my 200-day moving average. Silver, same thing. Big lows around the 65 handle. Previous all-time highs around 50 bucks. So that's where I'm positioning a lot of my silver trades. Bitcoin, looking a little bit better. We could still have pullbacks here, but as long as we don't take out 60K, probably some short term buy the dips. The market could be, chewing into this last leg lower. I could see Bitcoin, making its way up into the 90s or so. Big tell, and again, I have my doubts on this thing going all the way back to all time highs without having a pretty large risk on rally. So to me, this swing is setting up for a flat pattern, and I think this heads lower. I hope that doesn't happen, but I think technically that's likely what's going to be due. We have this larger swing to symmetry. So to me, this would be a swing, pullback, and push. And there's your symmetry. And there is your, hopefully long awaited buying opportunity to then maybe have like a forex move, like literally 4 times your money to get back to all time highs. But it's going to come with maybe a bit more pain and a larger drawdown to that maybe 70, 70 to 80%. Okay. All right. Let me get some comments here. Fertilizer, yeah, it's going on in the Middle East as well. Apparently, some ships are going through the Strait of Hormuz right now, digesting Iran war news. Yeah, I don't think it's that though. I mean, I think that just like anything else, this too shall pass. It's going to be something else. What's next in the news, right? Um, yeah, $1 trillion in revenue coming from Jensen Huang with Nvidia. That's a big one. So again, I think Nvidia kind of leads the charge to get some risk on back in the markets. Could be short lived. We'll see what the Fed says on Wednesday. Yep. So that's going on all week with Nvidia. Tasty trade 53.34 good. US or world inflation. I think this particular one, this is US CPI. You can look at the aggregate. You can look at other countries as well, but I keep an eye on the US. That's been our bugaboo the last couple of years, going from nearly 9% down to sub 2. This has been a more accurate reading to me than, all the drama between last year's longest shutdown in history. Labor data has been disrupted. Now it's hard to even trust it. Like non-farm payroll seems like, what's the point? Is it even accurate? Is it seasonal? It's like all these adjustments, all these revisions. It just makes things like harder to take it, at face value when the numbers print. So at least with ADP non-farm, they come out every week. At least this is using more metrics than just what's included and excluded. There's tons and tons of data points here for this Trueflation US CPI index. So I think this is a good trend to just kind of show if we are going lower, we'll probably see the government data, even though it's lagging, trend lower. If this is trending higher, it'll trend higher. Okay. All right. Is it St. Patty's Day today? All right. Happy St. Patty's Day. Who's celebrating? Who's hitting up Bennigan's for a green beer and a Monte Cristo this morning? Could you explain gamma exposure like you're talking to a high school student? Stacey, are you asking ChatGPT that or are you asking me that? So yeah, gamma levels. It's a couple things. Let me bring up my broker platform. We've got a few minutes for the open. We've got 50 something on Tasty and 40 something on Thinkorswim. There you go, Dan. Solid Guinness. When in doubt. It's always a good mark of a pour if you can get the clover on top or the shamrock. All right, just logging in. Thinkorswim 39.9. Yeah, I don't know if Bennigan's is still around. It was back in college. It was attached to one of our conference centers. So our like golf course and hotel conference center, they had a Bennigan's inside of that. So that was always a nice little grab a beer at the end of the day after a little round on the golf course. All right, SPX right here. So I'm getting a 53.34. 53.34 on Tasty. Let's go Thinkorswim. Yeah, Randy, I'm on YouTube. That's why I have cameras running for YouTube and Twitter. So on Restream, I push like 6 channels. So I turn the camera off on Zoom, so I can do both. Let's go SPX here for Thinkorswim, and Thinkorswim showing 39.91. So, like I said, I'm going to take the higher of the two. This is obviously a much closer resemblance than yesterday. Yesterday, we had like 90 in Tasty, which we had a feeling that was way off. But anyway, 53.34. Let's just round that up to 54. So let's take the expected move box. Again, if anybody's interested in having this, you can email me, chrispulverpub@gmail.com. I'll give you the indicator for $20. So expect the move box. Expect to move 54. Or you can do the exact number, 53.34. I'm doing the box 2 setting, which is going to be gap adjusted. We are going to have another large gap to the upside today. And then we'll plot a couple lines to see where things are going to stay for us. This is something I would like to. I'm not saying I'm going to fade the move. I'm still going to go outside the expected move. But we are looking at a 53.34 today. 53.34. We're going to be gapping higher. So ballpark futures up around 1.26. Good Lord, man. This is way up there. What's our VIX at? Another pretty nice reset in VIX. All right, just saying, look, unless we are going to crush this VIX back into below 22. Last time we hit 22, this thing spiked back up to 28, 29. Just saying. I want to look at the expected move. I want to look at taking some bear call spreads. I'm going to see if this market is going to be gapping up, and then maybe intraday price action rolls over a little bit. Certainly, futures is coming up and clawing back and finding some liquidity sweeps and trying to find some highs. Starts to roll over if there's any type of inefficiencies. Okay. Moses, I see your question on YouTube. Get to this level of knowledge. I don't know, man. I mean, I've been doing it for a long time. I would say that the biggest bulk of my trading, it's like I got really serious about trading back in like 2007 when I was first introduced to, forex trading. That kind of prepared me for, unknowingly, but good timing was, I had a stock portfolio running since 2000, had a little investment club with my some friends and family, my brother and some of his coworkers. And, we started trading since 2000, built a couple of screeners, subscribed to some newsletters, found some stocks, participated in the markets, paid dues every month, had some cash to work with. But we went through the great financial crisis like everyone else, and we didn't know what we were doing. And so after the great financial crisis, that's when I started to look into options because I was looking for ways to protect a portfolio better. And I was also trading currencies, which at that time I was just a day trader and a scalper. So I actually did pretty well in currencies at the time. And so we diversified and had a little chunk in currencies. We started incorporating options into our stock portfolio. And I don't know, it's probably been of a 2000 to 2007, 8, like, on and off learning curve, learn a couple of systems and strategies. If you learn a strategy, I think what happens is I'm sure everyone's maybe seen this diagram, but you try to stuff in more and more and more knowledge. At some point, there reaches this like law of diminishing returns where you don't. I'm not saying you don't want additional knowledge, but you certainly don't need more stuff, right? What you need is refine your current strategies. What is working? And then understand that, not every strategy is perfect. And I think one of the hardest things for traders to get over is losses happen. and it's trying to keep those losses small and manageable, and keep our trades survivable. And I think once you do that, you approach it as like it is just a game of trading. It's just a game of winners and losses, and you trade by numbers, trade by math. So, all right. Um, anyway, we'll talk more about that in a little bit. Let's see here. Futures about 0.35. That's I'm not sure what futures you're reading there, but I've got ES at 1.25. We're likely gapping like 1.2% higher today. So I'm gonna jump right in, kind of look at that expected move. As long as I can see opening price, looking at selling something about 55 to 60 points higher, that's probably going to be my starting trade today. It's going to be some bear call spreads up out of the way. Probably play some defense as usual. I'm not sure how you're showing point. I mean, you're seeing the same thing I am. ES live feed 1.24% higher. NASDAQ futures up 1.32. Dow futures up 1.27. Russell futures up almost 0.5%. We're going to be gapping like 1% higher. That was a close to open around what? Why is ES so far off? What the fudge? You're right. That's weird. How's it so far off? 0.5. Well, shit. I was way off. Nope, 0.45. How was my ES feed that far off? That's weird. All right, anyway, let's take a look. So we'll go down to the 1 minute time frame, see the expected box print a high and low. Right now, it's giving us roughly from the gap open, it's gap adjusted 67.85. That's my gap adjusted. Okay, 67.85. I look left, that gets us up above this 75 handle. I'm going to look to try to sell something around like the 6,800 this morning. Let me see what that looks like from our. So 68 is around a 4 delta. I'm not getting a lot of premium for that, unfortunately. Expected box move 67.85. See if that looks any good. So that's a 9 delta. 85, 95. Okay, I'm going to go in for 2 bear call spreads for a dollar 50, $1.60 maybe. So 67.85 by 95. I'm going 10 wide. This is going to be fast. 67.85 by 95. That's a 10 wide. 67.90 by 6,800. That's 10 wide. I'm going to try to get a $1.55 out of this. Not filling yet. I'll go for a $1.50 and settle, which I don't. I just got filled for $1.55. Okay, fine. Okay, coming into Telegram. Again, 2 bear call spreads above the expected move. We are going sold the 85, 10 wide. Sold the 67, 85, 10 wide. Sold the 67, 90, 10 wide. Coming in daily profit play. Bear call combo is what I'm doing for right now. SPX, 317 expiration, 67.85, 67.95, 67.90, 6,800. Got filled for $1.55 credit. If we push higher, that should be worth more. Oh, shit. Yep, it's already worth $2 right now. Well, I'm stupid. Guess I could have waited, huh? If you get $2 for it, get over $2. Yeah, 210, 185. Get more money. Okay, so I went right at. I started at 85. That's right at the top of the expected move. To be on the safe side, let's see what that push would be. So close yesterday. That's up 1.28%. That seems gettable. Let me check some gamma levels this morning, make sure I'm not totally off base on some of my levels. Otherwise, I'll be playing some fast defense here. All right. So we have it recentered. VIX box high around 57.90. Uh, by the way, at 22.16. So that's still just over 1% move, 22.16. So 1.4% move. Okay, let me check some gamma really quickly. Okay, so gamma runs out around 67.70. Positive gamma above 67.10. Well, Just to be on the safe side, I'm going to have to build a little bit of defense here. I'm going to take 80, 85, 95, try to take this trade for, 850 credit, play a little bit of defense on this bear call spread. So that's if we get way in the money on this one, trying to get this thing filled for a low risk, high reward. And then 90, same thing here. 850 credit, which again, I don't know if that's going to fill. But now let's go 80 to 6805. Then can I go 20 and 30? That's more of a call condor trade. A little bit cheaper there. Not much, though. Just trying to think of a defense structure really quickly. If I do a 80, that would be 15 wide. Let me go 20 wide here. So if I went 20 wide, 25 wide. All right, that's not going to work. So if I go 20 wide here, that puts me at a break even to 68.10. I don't think I'm going to get enough credit on this thing for a. Yeah. A call condor is not really going to do a lot of defense. I'd have to do probably the broken wing structure instead. Or if I wanted. So I'm threatened around the 85 to 90 zone. So that is, here's 40 wide. I'm just playing around with some numbers first. So 255. All right, let's just hang in there for a second. Stack up some bear call spreads. Okay, so bear call combo. Down a couple of bucks in this one. I'll put in here. This trade offered, $1.60 to 220 credit this morning. Not saying that one is better than the other, but yeah, Dave got 205, Aurora got 220, Mark got 220, 210, 185. Those are all good. Those are all really good fills. Okay, those are all really good fills. So we will see what the day looks like. Real-time gamma. Positive gamma is around 67.10. Highs up on this. I mean, there's decent call resistance starting, 67.50. Maybe run out of steam by the time we hit like 70, 75. 100% ATR is 67.90. To be safe, I do want to have some defense going on the day. I'm just going to try to get the defense to be a little bit cheaper if possible. And maybe give me like a 15 to 20 wide defense trade. So let me see if I can get something priced in for some defense. 20 wide would be good. If I can go 67.80, I can go 75. All right, if I went 80 to 68.05, that is a 25 wide profit trap. Let me see. I want to keep the risk relatively tight, but let me play around with this. So 67.80, 68.05, that's 25 wide. That should be enough to cover most of my risk in this area if I need it. Question is do I need to, sell more calls or obviously pair this with some puts? I'll take a look at some puts around like 66.30. That's way out of the way, but maybe some premium there. 68.05, let's go 30 wide on a butterfly. All right, so there's a little bit of risk there. Not terrible. I'm going to write this one down. 67.80, that's 25 wide. So 67.80, 68.05, 68.40. That break even would put me around 68.25 or so. 68.25 to 68.30. Not going to put that on yet. Let me see. 66.30. Not a ton of premium. What's our expected move low? Expected move low is 66.46. 35, 25 if I do this. That's a terrible trade. So if I get it out of the way with two put spreads, I'm only getting 40 cents for that right now. Let's see if this will offer. Actually, I'm just going to do a broken wing down here. This one has to offer credit. Broken wing. $30 and change. This is kind of wishful thinking here, but I'm going to go 50 by, let's go 45 by 30. And here. So it's offering a little bit of credit right now. Let's see. This is essentially a free, it's not free. I mean, they're still risking the trade if price were to drop all the way back down to 66.15. Let me see if I can get this trade for 10-cent credit. Okay, not feeling for either credits. I'm just going to go, let's see. See if we can get like a 20-cent credit for this. So on the put side, just going to do a broken wing butterfly. I might look at some spreads, 25 by 15, 20 by 10. Can this give me $1.50? That way I'll have it surrounded, 66.25. All right, I'll get some trades in here in just a moment. I'm going to look at trades this way. 66.25 would be my put side. 66.25 would be my put side. Right around there. Expected move gap adjusted would be lows around 66.45. And then we've got the 85, which is essentially where I put my call side right here. Okay. So I need to figure out if I can get a little bit more defense on the upside right here. 100% ATR is at 67.90. Let's see what readings we have. Yeah, I mean, there's no catalyst on like what is this up move. I'm really surprised how we had such a weird futures reading. I mean, this is S&P futures up 1.47. I am baffled how far off that was. So let me go. It's just because we had a gap in futures. That's got to be why. So we gapped in futures, and then the actual movement itself. Let's go this. There you go. So your gap open in futures from here, closed yesterday, futures up, but the intraday. There's our little surge from the 0.45% opening to that little push higher. So anyway, I just missed that gap, I guess. Usually it's so rare to get like during the week, get a gap like that from a close to an open from 5 to 6 p.m. So there's your, 4 o'clock, 4 to 5 close, 5 to 6 o'clock, everything, settles, and then you have a gap open. So pretty rare to see that. Anyways, take a look at the charts. Keep an eye on this. Yep. Yeah, so it was the gap that I missed this morning. So that 5 p.m. to 6 p.m. close, we gapped higher, and that's what gave us the extra 0.4, 0.5%. usually I'm looking at this is pretty spot on with just if you get a 1% move, you're typically going to get that gap. But like I said, it gapped about 0.4, 0.445. So I mean, again, my indicator caught the adjustment. So even though I was wrong, my indicator caught it. So expected move is gap adjusted about that 0.45%. There's your jump up about 0.48%. And now we have the expected move with our gap plus the expected move. And I'm using the higher of the two at Tasty, which is 53.34. We take a look at current price. And take a look at gamma levels. If we're running into some call walls, resistance here on 67.50. We'll see what the day gives us. Okay. So I'm going, I've got some more trades to put in here. I've got some bull put spreads, sorry. So some pending orders. SPX, this is a bull put spread combo. This will turn my day into 2 iron condor trades, 10 wide each. So 317 expiration, selling the 25. Selling the 20. Okay. So bear call spread combo is in. Bear puts are pending. I'm going to look at some defense on the broken wing butterfly side. Now let me see. I need to get some defense here on the upside. So just to make it feel a little bit safer, maybe the 15. Let's go 30 wide. See what this defense is going to cost me. So that is 25 by 25. That defense cost me everything. This is 20 wide. A little bit cheaper here. Let's see. I'd love to see price, kind of just hit a wall today and start to roll over pretty hard later in the day. Moses says, how do I check stocks liquidity? Well, you can see liquidity with the bid mid ask. If everything's pretty tight, that's a good sign of liquidity. If your open interest is high in an option chain, that's a good sign of liquidity. If you want a list of stocks, trying to think on I do have a dashboard here with Tanuki Trade. Let me see if I can just get the live GEC. So GEX here. Let's go. Dang it. All right, give me a second. All right, just trying to get a live reading. I'll give you some of those liquid tickers that we talked about. So GEX live, loading data. All right, let's see what the day gives us. So here is a little dashboard of today. It's been a while since we've seen a lot of green flows for short-term gamma to the upside. Let's go. Where's my ticker here? SPX. So we're getting some positive gamma today. Interesting that bigger picture. It's still not staying positive. So current price 67.53. Not a lot is up here. Not a lot is up here. That's crazy. Like very thin gamma. Bigger moves. I mean, 6,700 sticks out a lot. 66.45 sticks out a lot. But those are really not visible on this TradingView plugin. I don't see it plugged in on Dynamic Trend either for real time. Everything I see here is just kind of begging price to come up a little bit higher, maybe hit some resistance and then settle back in. It'd be nice to see some of this act as resistance today, at least intraday. So liquidity, let me see if I can find option screener. There's 200 stocks in here. We can just go by a liquidity filter. So minimum liquidity, any price, minimum liquidity. Let's see what it shows. Let's go to clear all. I'm just going to go minimum liquidity at 5 stars. Here is a decent reading. See if I can push this up at all. So obviously you have your indexes for liquidity, right? You get into stocks. I mean, start taking some notes. Apple, AMD, Amazon, Baba, Bank of America, Webull, Citigroup, CMG, Cisco, DraftKings. That is ETHA. That's Ethereum related. Ford, Freeport McMoran for copper and gold. That's a mining company. GDX is gold miners. GLD, GM, GME. That's GameStop. I can't believe that's still a 5-star liquidity. Yuck. Google, both of them, GOOG and GOOGL. HIMS, I wouldn't touch that one right now. Robinhood, that's a maybe. iBit for Bitcoin, that's pretty liquid. That's a BlackRock instrument. Intel, saw it was up yesterday. Russell, JD.com, that's another China play. Coca-Cola, KWeb, that's large cap China tech. MARA, that's a mining company for Bitcoin. Probably take it or leave it. Meta, Microsoft, Nike, Nvidia, NVO, Pfizer, Palantir, Peloton, no thank you. PayPal, Qs for the NASDAQ, Riot, that's another blockchain related stock. Rivian, I don't know about that. I can't believe that's 5-star for a EV company that had a great run back in 2020, and it's been crap ever since. Rocket, not bad for the housing market rebound. Silver, SMCI in the semiconductor space. Snapchat, just would love to see Snapchat get a bid. Just trading like 5 and change right now. I'd like to see it get back to $10 if possible. SoFi, had a good run on SoFi. I held that thing since I don't know, like $8, $9. Took it back up into the 20s. SPX, of course, SPY. This is I want to say this is an inverse related. SQQQ, is that an inverse related ETF? Maybe it is. AT&T bonds for TLT. Tesla, TSLL, Uber, natural gas. UVXY is a VIX instrument. Verizon, Wells Fargo, Walmart, then some sectors, XLE. So again, these are some of the tickers that they use. There's plenty more that are liquid. You can use a Tasty Trade account. You can go Tasty, take a look at your liquidity, high option volume, right? This is just liquidity thing. Go inside of every watch list in Tasty Trade. It's automatically built for you. Liquidity, liquid symbols, boom, and it's a decent list here. So there's easily 50 to 100 liquid tickers that you're watching. Most of your volume is going to be packed into probably the top 50 stocks. So a couple ways to find it. Just a quick search. That's all. Cool. All right. Let's see if price will come back to the open this morning. If it does, that maybe gets me filled on my put side. That makes my any type of defense I want to put in here on the 85 handle a little bit cheaper as well. So let me start playing around. Like this isn't terrible. I'm filled for $1. filled for $1.55. If defense can be, let's say, $50 or less, and again, I may not need it, but I'd feel a lot more comfortable having like a $20 wide profit trap if I can get filled for, let's say, 75 cents, 60 cents. See, we try something here. Let's try 50-cent butterfly. That way I still get $1 and change. See what price does here. So not even close to getting filled yet. Might as well set it at 50 cents. Okay, so play around with that for a second. Kimberly seems to have a pretty big target on oil. $188 target. That's pretty far up there. Love the ratio spread. Took the 137, 132. What was that on, Vladi? Micron? Yeah, nice. Is that Micron you're talking about? Good. Powell FOMC, yeah, that's tomorrow. That's tomorrow. BE. Oh, is that what's BE? Is that Boeing? Oh, Bloom Energy. Oh, yeah. Oh, yeah, we took that ratio spread. This is a good, I mean, this is a 15 wide ratio spread, 135 by 120 for 250 credit. I'm actually pretty pumped about that trade. I think that's pretty good income trade. High premium. If this goes higher, just an easy $250. So, yeah, I'll set a couple chart alarms on this one. If it gets into a profit trap by April, that'd be pretty nice too. But let's keep an eye on this one. See if we revisit highs. 175 maybe. Okay, Bloom Energy. I forgot about that bad boy. It's a good trade. Okay. I have some more emails to get to today. Obviously, I had the little internet flakiness yesterday. Got the office back up and running. More people asking about the expected move box. So if interested, $20, you can have the indicator. This is something I'm going to use every single day. Nice way to calculate out. I do a gap adjusted where I'm using this for 0 DT, but we also put some bonus trades in where, if the VIX is high, what's nice about, who remembers the bonus trades that we took out a couple of weeks ago? VIX was around 26, 27 when I took the trades. Here's Telegram when I did the trades. You go find it. So we went to, it was a bit ago. NVIDIA pending orders. There it is. So bonus trade, built the expected move box indicator. I did SPX. It's an iron condor. I did XSP equivalent iron condor and pulled in anywhere between $1.40 to $1.15 on 2 trades XSP, and then pulled in $6.95 on SPX. That was VIX at 26. So if the VIX is going to go down to 22 and stay down at 22, I mean, again, that should help me have the implied volatility be greater than the realized, or the expected move is greater than the actual. All I'm looking for is, if this is the case, then I should take, I'm guessing from the, almost $7 credit, I can probably hang out of that thing until it hits maybe $3.50 or less. So $7 credit, pull it out for $3.50 debit or lower. Take a few $100 in this one. For my XSP trades, I pulled in $1.15 or $1.40. I'm happy taking like 50+% away from that. So, grab 55 to 60 cents in this one, or grab, 60 to 70 cents in the other one. That should get out of the trade way before expiration. If I think we're looking good for expiration, then I will hang on to it a little bit longer. Maybe I can grab, $5 out of this, out of the 7. But anyway, I built this out using the expected move, and I plugged in the numbers, went to my broker platform, went out 45 days, found the expected move, gap adjusted, and created my bear call spread and my bull put spread, and hopefully that's enough to keep us in profit. David says, Mara, as a miner, they put on an announcement they are converting their mining locations to AI data warehousing. Oh, look at that. That's freaking smart. That's really smart, actually. Was that on this? I mean, it's still a very like underperforming stock. I mean, there was a lot of excitement around it. It's because it was attached to Bitcoin until Bitcoin kind of shit the bed a little bit. So, um, I don't know. I mean, possibly $7 lows, $5 lows, maybe a risk capital trade. Like it can't go to zero, or if it does go to zero, like that's the worst case scenario, but you can accept that. I'm out of here. I don't have any trades in this. We made some profit on those 2 trades. That was last year. Let me take a look on the fundamental scanner. MARA. Price to sales 4 times. Not enough history to give us discounted cat. I mean, that sucks. So, why is it compared to these other companies? I don't know. All right. Well, that makes me enjoy it less. So I probably won't take that trade. Unless the premium is so enticing at like, $6 or at $5 to maybe throw on a couple of naked puts. Otherwise, is define risk, buy a chunk of shares, set a chart alarm at these highs, and see if you get a squeeze to the upside. If you do, take your profit. I don't think there's anything long term in this one. At least for me, I wouldn't be holding this thing long term. And it's probably going to be one of those stocks that takes a long time to kind of base out. Maybe there's some short term buying here to pump it back up. I'd say if you're lucky, maybe 5 to 20, which is a huge return, by the way. Um, but you'd have to pay attention to that pretty closely. And if it turns to this, like I'm not interested, right? But that's the risk you'd have to be willing to take. If you put something in this, you have to expect it to maybe turn to this type of stock. So I don't know, probably better safe than sorry. I'd hold off on that. All right, can I look at this? So this is a butterfly spread pending at 50 cents. If price goes down a little bit, that might get filled. I'm going to take this out for just a second. Let me see what the 80 and 05 that gets me up to 25. Let's go 30. So this spread, that'd be 35 wide. There's still a little risk in the trade, but if I can get this one down to kind of the same thing, it's like putting in a broken wing type structure, gives me a $2,500 profit trap. I think if I went, I'm trying not to overlap my strikes. That's why I'm looking at building this out a little bit differently. So if I buy 70 to 90, that's 20 wide. Then go 30 wide. Yeah, that's $2. It's cheaper to just build it out this way. So 80 to 05, that's 25. Let's go, that's 30, 40. So I could play defense for $1.15, but I only pulled in $1.50. I'm just going to keep this butterfly spread here for 50 cents and see if that fills. That's 20 wide for 50 cents. That's not a bad defense trade. That covers my risk here around that 6,800 handle. Obviously, I don't mind having the bonus up here, but I want this to be way, way cheaper. So broken wing structure doesn't look good for defense right now. Current price action is looking okay, where we are, up for the morning, hitting our first kind of levels of call walls, maybe dropping back down to recenter. And we'll see what that looks like. I still have some pending put spreads, 66, 25, and 20 still pending. If I see this trading for over $1, I might add those in. I've got it pending for $1.50. Venkat's asking, what is the wheel approach? Wheel approach is one of my favorite ways. That's like if you're willing to own something, there's a strategy called the wheel strategy. We've talked about this before. So the wheel strategy is step one is you sell a put. So you can do this as a naked put, which means you don't want to own, right? But typically the wheel strategy is trying to tell the market, I want to own the stock. So we'll say this is cash secured. You're willing to own shares. Okay. So this could be on anything, S&P, so SPY, Qs, Dow, Russell, anything you want to own. So you sell a put. And then from there, what's next? Two, is price above your strike? Yes. Then there's no assignment. Keep the income. Okay. Or is price below your strike? Yes. Assignment. Own shares. Then you go to the next step. Next step is covered calls. So, your break-even price is sell put minus the put credit, right? And then covered call credit. So sell call in order to have a break even or better result. Obviously, you're trying to use the covered call to generate income. And if that is called away, so we go to the next step over here. Is price greater than your covered call? If yes, stock called away, net profit, or is price below your covered call level? Yes. Keep covered call premium, lower cost, and repeat as necessary to repair. So this is why it's called the wheel. Because in this decision tree, you're just doing one of these steps over and over again. So if you sell a put, right? You sell a put and you're not assigned, then you just keep the income on the sell put. If you sell a put and you are assigned, then once you're assigned, you take your strike that you sold the put minus your credit from that naked put or that cash secured put, and you know your break even price. And then when you want to add your covered call, is just make sure that your covered call with your break evens will be repaired for some income. Some people are looking for a minimum, $500, $1,000, thousands of dollars. Some people are like, oh crap, the stock dropped up pretty aggressively. I just need to get out of the stock and repair it, not take a big loss. Typically, it's not that dramatic trading wheel strategy. These should be out of the money puts, right? So anyway, if you know your break even and you sell a covered call, okay, so you sell your put, you're assigned, you sell your covered call. If price rallies above that covered call level, it gets called away, you keep the difference. So if your break even was, let's say you're trading the S&P and your break even was down to 650 and the stock is up to 655 and it gets above your covered call. You get called away for profit, you make money, and then you repeat it. Sell another put and do it again. And so this wheel strategy is something that just continues to run. A lot of traders have a lot of fun with this. I would say the only thing you want to be mindful of on a wheel strategy is the broader market is bullish. Okay. I did a lot of wheel strategies and got myself into some trouble in 2022. So what I ended up doing, instead of doing a wheel strategy, I did collared strategies, which is I sell a call, buy a put because I own shares and I needed to play defense and repair. And so I had essentially, paid defense, finance defense to the downside. That helped me a ton in 2022. But if we are in a broader bull market, the wheel strategy is fantastic because you are getting most stocks for the most part. Stocks are going to be going higher or staying relatively resilient and stable. And so selling puts below support levels, selling puts while things are making higher highs and higher lows. A lot of times you won't get assigned at all. You can just keep the income, especially on SPYs and Qs, right? But if you are assigned, you want to be able to repair it pretty quickly, not tie up all your capital. So just saying, in a broader bull market, wheel strategy is great. Gets people into trouble if they ignore the fact that the market is bearish, because all you have is, if the stock is here and you sell a put and the market is falling and it's going to fall and fall and fall, you don't want to get stuck on, oh my God, sell another call and I'm upside down, sell another call, sell another call. You have to do this for a while until you can get your cost basis low enough until the stock finally rebounds. On an individual stock, that is much more difficult than it is on an index. An index, you kind of have those buffers where if the market is down 5% or 10% or 15% or 20%, you're in a pretty good chance just to see the market respond and go back to the upside. Okay. But an individual stock where we've seen drawdowns that can get as nasty as 30, 40, 50%, 60, 70, 80, 90%, you don't want to be stuck in a wheel strategy on a stock that's going to go down 50, 60%, right? Imagine for a moment you're in Oracle and you started doing a wheel strategy on Oracle and things down 50 to 60%, or IGV or any type of software stock that got crushed earlier this year, right? So like I said, big picture, just make sure that the market is broadly supported. Most things are trending up, or at least in an uptrend, and just pick your levels. And also, most importantly, is here. If you want to own shares, be willing to own them. If you don't want to own shares, this isn't really a wheel strategy. If you don't want to own shares, you're just doing naked puts and managing premium, which is also a strategy. Okay. All right. So now my defense got filled for 50 cents. So I've got a 20 wide butterfly up here if interested. So that sacrifices 50 cents of my $1.55. I'm going to look to see if the price will fall enough to give me, those puts are only trading for 20 cents. Garbage. So I've got at least a 20 wide defense here up at 68.05. I might still park, if it's cheap enough, I might park this little butterfly spread as well. That's 25. Let's go 30. That gives me a little bit wider break even plus a 25 profit trap. I might take this one for like 10 to 20 cents. I'll put a 10-cent debit here. Let me see if I can get another. So the premium is already depleted quite a bit. So if I did this trade again, I get another 65 cents credit. That will pay for my butterfly. Let me play around with this. We get back up to highs. Maybe I'll do this one. This one get filled for $1. Take another trade there. Okay. So, pending orders on the out of the money put side for the expected move, like quite a bit below the expected move. Here are my two bear call spreads. This is a butterfly spread to play some defense. I played that for 50 cents. It's a $2,000 profit trap for 50 cents. Now, all I'm really doing is trying to mitigate some of the risk. So we'll see what the rest of the day looks like. Let's see here. On that note, how do you repair a stock that's gone down a lot? Yeah, you just have to keep selling calls. So let's give an example. You have a stock in mind. I mean, if something is really bad, what you probably have to do is, you have to recognize that a wheel strategy is going to take longer just to work your way through a stock. So let's do an example. Let's do a little, full example. What do you want to own? Give me a stock you want to own. You want to use Nvidia? It's not that expensive. 182. It's a third of the price of the indexes. Super liquid. IBIT. Okay. All right. IBIT is fine. Okay. So IBIT. Let's say that as this was going up. Okay. So a good time. When is a good time to sell puts? By the way, do you sell puts at the highs or do you sell puts on pullbacks? Personally, I like the latter. Right. I like to sell puts when the market's pulled back a little bit. I mean, when we have support, I mean, we have a lot of 200-day moving average support here. So lows and lows, and this is why this level is so important here. So I could see some traders getting in trouble if you sold a put right here. Let's say you sold like a $55 put. This is again just hypothetical example, but a good way to walk through this kind of wheel strategy stuff. Okay, so let's say you got paid on some puts here and no assignment. You got paid on some puts here, no assignment. You did the same thing here, hoping that we bounce off this like $60 zone and then go up to all-time highs, but it didn't. So we're going to say that the trade is you sell a 55 put for, I don't know, $2 credit. Okay. And what does that mean? Well, the price is trading around $60. Price is trading around $60. You sell at 55. That means that your $55 strike minus the $2 credit, your break-even price would be $53. Okay. Now, we fall very quickly to 47.50. Your break even, if you get assigned, and this would be closer to expiration, or maybe the market assigns you early, or the broker assigns you early, your break even is $53. All right. So let's walk through this like step by step. First thing is you sell a put at 55 for $2 credit, and price falls. So now price is at 47.50. You get assigned, you own the shares at $53. Now, what I would be doing at $53 would be, okay, that's my break even. Can I sell? Can I sell? So assigned at $55. My break-even ownership price is $53. Then I would say sell a $52 or sell just a $53 covered call for break-even or better repair. And then you kind of leave it there. Now we go from $47.50 back up to about $55, and then we fall again down to $35. Well, let's say the stock didn't get called away and you still own shares, and your $53 covered call now gives you a break-even ownership price at, we'll say $52. They give you whatever. They give you $1 credit. Okay, so this is for $1 credit on covered call. So now my break even is 52. Price falls again. Okay, Ryan, I see your comment there. Technical analysis on Ubisoft. Yeah, we can take a look. UBI, sure. Let me finish this up. Okay, so break even at 52. Now the stock has dropped again to 37.50. Well, now you're playing around with time and price is much lower than your break even, which means your call is further out of the money, which means you're going to get less premium for this, but you can still do the same thing. Do you believe that Bitcoin can go up? Do you believe that if you go out 30 or 45 or 60 days that you can get something to repair this? So maybe what you have to do on this trade is, oh crap. Oh, fudge. Sorry. Let's do it again. I'll just type it out in the text box. So we say price falls to $60 support. You sell the 55 put for $2 credit. Then price falls to 47.50. You're assigned shares at $55 minus the $2 credit So break-even price is $53. You sell a $53 covered call for $1. New break-even price is $52. Okay. Price falls again to, we fell down to about $37.50. Now, you can just keep repeating the covered call portion until your break-even price and sell call level allow you to profit. I mean, if you stick with this wheel strategy long enough, you can essentially own stocks for dirt cheap. I've had trades before where I, bought something, let's say at $50. I work my cost basis down to $40 or $35, and the stock goes up to $50, $55, $60, $65. If I did nothing but just buy and hold versus using options to lower my cost basis, I can make a lot more money this way. But it is an active management. Okay. So what I was going to say is because of the bigger fall, we would just have to keep selling covered calls. The one thing you can do that with is, just a little rule of thumb or best practice. So if price is falling aggressively, you can consider a collar trade, because remember, you own the shares. So a collar trade is you sell a covered call and you buy a put, and the net cost is either small debit or small credit. So it's virtually a free protection trade. If I think the stock can go lower, that's typically what I look to do. Is I'll do this collar trade, which is I sell a call where I don't mind the stock getting called away. I buy a put. I try to make that as cheap as possible. A lot of times I do a collar trades for credits. It'll be a small credit, even if it's like 10 cents credit, 50 cents credit. I get some upside appreciation to get the stock called away. I essentially have full protection on my ownership. So if the price falls further, I can generate, some income or really just protection on the long put. Okay. So best practice, if price is falling aggressively and you're worried, I'll put this here, and you're worried about more downside, consider like audibling or switching the strategy up from just selling covered calls into doing a collar trade. That way you can buy a put, sell a call, finance the put, and essentially it's a cheap put. All right. But remember, the whole point of this trade, the entire point of the wheel strategy is to be willing to own shares, lower your costs, collect income, and repeat. So if you don't believe the stock can go higher, you really shouldn't be doing a wheel strategy. If you don't believe that in ownership as something that's going to generate income for you in the bigger picture, you shouldn't do a wheel strategy. Are there going to be times when the market doesn't cooperate? Sure. But if I were to start a wheel strategy on SPY or Qs or Dow or Russell, I mean, I'd be willing to wheel this thing like crazy until maybe we hit 20, 30, 40, 50% lower than the all-time highs. And I would say, I don't want to wheel this anymore because I want this thing to finally go up. Ultimately stocks like that, indexes like that, they're built to go up. Individual stocks, if you're in the right sector, it's probably going to go up. If you're in the wrong sector, like this year with software, I'm sure we had a lot of trades beat on naked puts or on sell puts. And they fell, right? So does this make sense? So if you think things can go lower, you can always do a collar trade. And again, you're doing this options around the own shares. If you just want to wheel this thing, just keep selling covered calls. And I'll put this on the wheel strategy. Time is your friend. Okay. So if you go out further on your covered call, you should generally get more premium. Even if it's like, well, in the case of Bitcoin, like we said here, if I did a sell put at 55 and price fell, if I went out 30 days and sold this call versus 60 days or 90 days, I'm going to get more premium. The problem is I go out further and the stock's down a bunch. Well, What this means is that that call is going to be worth most of your credit. So if I sold it for $1 as a covered call, if the price drops within 30 days, this dollar credit is probably worth 5 cents, 10 cents. You can take most of that profit, take it, and then roll it down and play around with your break-even prices. Try to get closer and closer and closer to break-even to repair. The most important thing is you can do the basic math to get your break-even price. So if you have your sell put minus the credit you pulled in for it, your covered call credit, covered call credit, covered call credit, covered call credit, you just keep lowering your cost basis until eventually when the price does go up, if it's above your break even, that's profit. And you have repaired a stock. So the reason people do this is because you don't have to lose on something. You know, in a stock market where the stock index or the individual stock can go higher, you don't have to lose. You just have to repair it. And that is a nice thing. But to do that, you have to have some time, some patience, and some cash. Okay. What makes it more challenging is if you have no capital to do this. If you can't own stock, then you really shouldn't be doing the wheel strategy unless you want to manage just the credit side, which is not the wheel strategy. That's just doing, premium management essentially. Okay. Does that make sense? So little down and dirty version of the wheel. Okay. All right, we're good there. Good there. Let's go back to S&P. So price cooperating pretty nicely today. We're kind of right back into center. My bear call spread should be looking pretty good right now. This is a cheap defense. This is top defense right here. So we got a bear call spread combo that's up about 115 of the $155. If you got filled in this one for, $1.85, $2, $2.10, $2.20, what's it trading for right now? If you got filled for that bear call combo with me, but you got $2 on that trade, what's it filled for? Is it showing? I mean, I'm up 73%, so you got to be close to up like $150, $160 on those trades. That wouldn't be a bad trade. Okay, if I was filled for $2, I might be taking the profit right now, grabbing like 140, $150 and being done for the day. Yeah, up 160, Aggie, nice. Any thought on teaching college level trading? I mean, if it was a class, I'd teach it. I got my master's. I can go teach somewhere. Yeah, I'd love to teach. I taught college business courses back in the day when I was going through grad school. Nice. DPP 205 debit 150, Dave. Okay, good. So you're up 55 cents. Not bad. Jeff says, yes, 150 out already. Nice. Doc appointment. So out at 50 cents. Good and done. Awesome, Carson. Good work. All right, Ryan, let me go back and get your technical analysis on UBI. Accumulating investment. Would you wait for volume to add more? Let me take a look at UBI. So are you a big gamer? Ubisoft. Oh, boy. Well, unfortunately, this looks like one of those stocks where I'd say it's kind of dead money, at least for the interim. What is it about the stock that is so bad? I mean, Ubisoft, you're talking some of the great titles. I mean, Assassin's Creed, Ubisoft, I don't know if they still have their hands in the Call of Duty series, but here is, where'd my Simply go? Let me go Simply Wall Street here. I just want to get some fundamental scanners real quick. Okay. So you can go the French ticker UBI. There is an ADR that trades the same way. So UBSF. But let's just look at this fundamentally. So I mean, here's a good thing. Trading well below estimated value, earnings forecast to grow, trading good value compared to peers. Very volatile share price, as we've seen. The stock's been dead down, like just straight down from all-time highs. Price to sales 0.3%. This shows discounted cash flow about $15. I mean, so there is some upside here. I would say, I mean, I don't know where your stock is at. I mean, do you own it already, Ryan? I'm seeing it on YouTube here. Do you own it already? If you own it already, I'm curious where your cost basis is because, I could see some traders that have been chasing this thing where this was, and this is what's so tricky about individual stocks. This thing was up 3,000%, only to see 3,000% give back about 90% of its gains. 96%. Isn't that insane? Something that you could make 30 times your money with, okay? 30 times your money, only to give literally all of it back in a matter of a decade. This high was in, I mean, we're talking 7 years, you give it all back. That's crazy, man. So anyway, where we're at right now at 4 and change, I mean, at this point, it really just has to give a base, right? So I mean, if I mean, you look left, it looks like a strong enough support level to say, all right, if I want to throw some capital at it, can we go from 4 to 10? That's a good enough move. Yeah, you own it at 390. I mean, I don't know what your big picture is, but I would say if we go from 3 to 10, take some profit. You know, if you want to get it safe, or you have an amount of risk capital in, where it's like I will hang on to this trade and see if maybe this last high to low swing, whatever this looks like. Let's say we just pull back to a reasonable fib. So we go from this high to if we establish a low in here, which I'm guessing we're going to establish a low sooner than later. And then we're just going to have, kind of the dead money, the oscillation before this thing maybe breaks out later. But even if we go from like a 4 to 10, that's still a pretty good short-term win. If we pull back to a Fibonacci, even the 236 gets you back to about $23, $24. So if you're in, you want to set a target around $20. I think that's doable. We've had it there. We've had it there. So if it bases here and chops around for years, I think it's still, $10, $15, $20 is a good price target. If you own it in the, $3, $4 range, not a bad outlook. It's just, to me, I would say whatever I'm willing to put into it, it's got to go to zero. That's my risk. And then the rest is all gravy. So if I'm willing to risk it down to zero and it goes up to $10, $15, $20, I'm happy with that profit. Would I hold on to it longer than that with a trailing stop loss? Yes. Otherwise, no. Okay. Tencent did $1 billion investment into when it was $12 a share. Yeah. I mean, that's understandable, but still, I don't know. It's just along the themes of, software. So for some reason, I look at a stock like this and like something is clearly wrong with this stock. Like this to me would be there's a chance to get some profit out of it. I mean, if Tencent wants its money back, I mean, you never know if Tencent's going to hang on to it either. They could sell it to somebody else. So and also that $1 billion investment, they could get out at pennies on the dollar and maybe say, look, we put in $1 billion, we're going to walk away for 500 million and be made whole and just write it off. I mean, you don't know. But if they're still in business, still making games, you never know. But if I'm looking at it subjectively, which I am, I think this is a stock where if I threw in some money at it right now, that money either goes to zero or it turns back to like 10, 15, $20 and we get some upside to it. There's lows back here in 2011, lows back here in 2002. It wasn't much lower than current price. So my hope is that it would kind of trough out here, hold some lows, and then work its way back up to maybe double digits. If it gets to 10 plus, I'd be happy getting out. $4 to $10 is a nice, double. It's a triple digit gain. Good enough. I just wouldn't be holding this thing very long term unless it was just park it in here. Don't worry about it. Set a chart alarm at some ridiculous level like, $35 to $50 and make, 10x your money. It's a chance. It's a lotto trade. Is it guaranteed? Probably not. But, at least pay attention to it. I would just say it's risk capital at this point. Okay. All right. Larry did the 67.85, 66.70, 10 wide in at $1.80, out at 70 cents. Great work. Very nice. Close out 2 contracts, 220 out at 45 cents. Awesome, Paul. Good work, man. Okay. Ryan, you're good on that? Okay. Very good. Moses says, I'm not sure if you trade with stop losses, but if price gaps open lower than my stop loss, not triggering stop loss. So a limit stop is always a helpful thing. Depends on what you're trading there, Polo. Right? I mean, if you have a stop loss in forex or stop loss in futures and you get gapped lower, you could take a worse stop than what you want. So a limit stop loss oftentimes can be a much healthier trade. The problem is it may not get filled. So, I mean, typically I trade with defined risk. I mean, that's what reason I switched to options and trade options so heavily is because I accept that if I'm dead wrong on my price, time, and direction combo, I just accept the risk for what it is. So the nice thing about options is I know the most I can risk is what I put into the trade for defined risk. and I don't really have to worry about the ebbs and flows, the ups and downs of individual prices. If it goes way below my strikes or way above my strikes, it doesn't really matter to me because it's already predetermined when I take the trade. Does that make sense? All right. Let's see what else we have going on for the day. Again, real time gamma, big thrust here at 10 o'clock. See if the market's going to kind of use this area. Maybe it might try to climb a little bit higher today. Maybe we'll see. Go back to the expected move here. Gamma's starting to light up a little bit. That 50, 60, 70. We can make our run there. See if there's any more reasons. Energy, financial stocks lift Wall Street as Fed meeting looms. That's tomorrow. Okay. I mean, if the market goes aggressively up today, I'd be a little surprised. I mean, having the market gap up and pause, have another gap up and pause. I could see tomorrow being more like open volatility. Does that make sense, everybody? Like tomorrow's FOMC afternoon from 2 to 4 p.m. Um, I think there's going to be a lot more open volatility tomorrow because of the Fed. Even though it's going to be a non-cut, it's going to be a press conference that maybe people pay attention to, maybe they don't. Maybe it's all noise. Maybe it doesn't really matter anymore because everyone knows that Powell's essentially been replaced by Warsh. And I don't think he's the type of guy that's going to go in and I don't know. He's just not one to kick the hornet's nest. I think he's pretty vanilla. He pretty much toes the line and like says one thing like, "Hey, we pay attention to inflation. We pay attention to labor. We'll do whatever it takes." But also, blah blah. I mean, he does like such a good job of like just weaving through the Q&A and basically saying kind of everything to stay right in between like what everyone's expecting, where it's not out of the ordinary. Very rarely does he go off script. Okay. All right. Good stuff. Let me see here. Let me see if I can get some profit. So I'm down, defense trade, $10. I mean, I'm up 100. I could take the net. I mean, I'm up about a net $100 maybe. I'll just hang in there a little bit longer. Let me see if I can get let me see if I can structure this defense trades again. So 80, 68.05, 35. Okay, so I can get that broken wing for 50 cents. That's not. I mean, I wish I took this defense, even though the break even's about the same. This one could pay a little bit better because this defense kicks in right at 67.80. So if it's testing either one of my levels today, that could be a good spot. This one's 20 wide. This would be 25 wide, but I'm going to keep an eye on this one. Maybe it's got to be less than like 25 cents now. Or can I close out my butterfly? Can I close this out for a small winner? 50 cents. Close this out for. I'll try a 60-cent credit, maybe. Well, hell, I might as well try to make a few bucks on it, huh? Okay. So I'm going to try to grab a couple of bucks. If price is going higher, I might try to grab a couple of dollars of profit there and then look at repairing a little bit differently with a broken wing structure. So that would be 25 by 30. All right. Let me see if I can get. We just look at a repeat here. So if I go 85, 95, 90, 68, 50 cents credit more, it's not worth the risk. This trade, not worth the risk. 90 by 10. It's only 30 cents, not worth the risk. All right, just going to keep an eye on this stuff. Looks like we've got some people closing out for some wins today. That's nice. Catherine out for $1.60. Awesome. Grab $1.60 a contract. 220 out at 45. Grothry out at 45. Good. Larry's out for the day. All right. I mean, so far, so good. So here's what I've got going on. I've got my call spread combo right here. Call spread combo right here. A little 20 wide defense in case I need it. I might still put in the 80 by 6805 by 35. I might put in that broken wing structure in case this does want to flirt with the tops. Otherwise, what would be also kind of helpful for the day is, and this is an if, you can see here the expected move on the day. 25 is left on the day. This is the expected move. It is unlikely that my puts are going to get filled, even though I want them to get filled. But it'd be way out here, out of the money, below my expected move. So if this gets filled, I'm trying to pull in another dollar 50. If I pull in any credit on a broken wing, that's another 25 to 50 cents with a profit trap opportunity. But again, if that doesn't fill, I'm essentially left with like $105, $110 on the day. Like defense would cost me money, but I still make 105, 110 bucks on the day, and that's okay. So we'll see what the rest of the day looks like. 6710 to 6700. That might be a decent little gap fill area. If price is going to fall and come back to this positive negative gamma, that might happen to be in there. Or it's just another day like yesterday, which was up and down and up and down and up and down. It didn't do anything. Today might feel very similar. I still look left on the chart. There's a couple spots I'll be watching. So this gap level around 67.75. And obviously we can play into this a little bit as well, around 67.10 to 6700. So price is going to gravitate towards any direction today. I mean, this thing either stays dead sideways coming into the Fed tomorrow, or we gravitate towards the 67.10 to 6700 zone, or we gravitate towards this, kind of 67.75 level. My strike is 85. That's where I put in my first call side. So 85 is where I want to see price stay below today. So for me, efficiency is stay below this line, stay above this line. Right now, since we're right back to center, a lot of you already closed out for profit. If you took the bear call spread combo, like I said, if I was filled for $1.80, $1.90, $2, I'd probably be already out of the trade and just take the 150, 160 on the day, be done, and off you go. The defense trade it's a put fly. It's a butterfly spread. It's 20 wide. It's okay. It's there to basically defend me. If price threatens, between 85, I'm in this thing for 50 cents. So basically, if we get between 6785.50 and up to 6805, I'm defended for up to about a $20 profit trap. Okay. So that's enough to cover my risk here. And I'll obviously have to kind of manage this and assess it later in the day. So I bought the 67.85, sold the 68.05, bought the 25. So it's equidistant. It's 20 wide. I got filled in that thing for 50 cents. And right now you can take that thing for I don't know. The fills are a little wild, but maybe it's cheaper. Maybe you can get it for 20 cents. 20, 25 cents, much cheaper to still get the same 20 wide defense. But I got filled at 50 cents, which to me looks like, could I get out of this trade for 50 cents and then take a slightly different approach? Could I get out of here at 50 cents credit? Get out of here at break even? Take my fees, get out of here at break even? Nope. So yeah, I'm just going to cancel that for right now. I'm looking at making this defense play pretty cheap. Something like this. That's not bad. Yeah, basically I'm getting a 20 wide defense trade here for, maybe 40 to 50 cents. Looks like 50 cents is probably going to be the fill. But I want it to be cheaper. That way, if we do get up to these call sides, I can actually make, up to almost $4,000. But I'm not going to put that in yet because if I don't get anything else filled, I'm essentially taking all of my premium out of the bear call spread. So I'm just going to try to hang in there for right now and just chillax and let price be price. So all I have is the bear call spread combo, top side defense, and I'll keep an eye on both. Okay. Good stuff. All right. Couple more things. Yep, I see some emails coming in. Again, I'll say this. I mentioned this in my sessions as well. If you would like the expected move box indicator, I made this a couple weeks ago. You'll see me use this and reference this thing every single day. I built this so I can do a gap adjusted. This is a box 2. If you go to my settings, you can set just I pulled it straight from the broker platform. So my plus minus this morning on Tasty Trade was 53.34. I plug it into this and then I show box 2. Box 1 is based on a reference point with the previous day's close. What you'll notice here is if I don't make this box 2, if I don't make this gap adjusted, you're going to see that oftentimes with these bigger gaps in the market, it is easy for price. Like yesterday alone, box 1 price was outside of the expected move the entire day based on the previous day's reference point. So I have an 18-minute video that explains the indicator, how I use it. You can go on 0 days, you can go 30 days, 45 days, 90 days. You can use this on futures and indexes and individual stocks, oil and gold and silver, whatever you want. So I like to do box 2. Now I get the gap adjusted. I plug in the number straight from my broker platform between Tasty Trade, Thinkorswim, and take the higher of the two. And this generally is pretty darn safe, probably 85, 90+% of the time. Those are pretty good odds to play. Okay. So we will see. But for the rest of the day, if price is going to be gap up and chill for the day, we'll make some money. If price is gap up and chill for the morning, but starts to get some legs later in the afternoon, there's still some gamma levels here to maybe hit some resistance as we head into, FOMC tomorrow. I would imagine, and unfortunately, tomorrow is not going to be the easiest trading day. Tomorrow with FOMC, we all know this. If you're with me for these daily profit play sessions, FOMC for daily profit play is a very annoying trading day because we can take the trade in the morning, get a nice fat premium in the morning, and sit and watch price do nothing for literally 4 to 5 hours and not get paid anything like we should, right? So it's one of those trades where if you take it, you really have to probably sit on that trade until 2 p.m., 2:30 p.m., or 3 p.m. Eastern time because it's such a sticky window of volatility where all of the expected movement, and maybe it's 40, 50, 60 points for the day, that expected movement is typically going to happen after 2 p.m. when the Fed actually has its rate decision and press conference. So from 2 to 4, that's where all of the volatility and volume is. The day is going to be very quiet, most likely. So unfortunately, I'm probably not going to participate in the morning for daily profit play because all that sticky volatility won't give us any premium. Like we'll get paid on the trade, but we have to wait and wait and wait because it's that elevated expected move or elevated implied volatility that comes later in the day. TradeView indicator, I need one for Thinkorswim. You have both, right? I mean, I swear I emailed you the. If I gave you a follow up email, I gave you both. You have the Thinkorswim and you have the TradeView. I mean, TradeView, I need your user ID. So if you are asking for this, send me an email, chrispulverpub@gmail.com. Okay, I think I've got it down here as well. So chrispulverpub@gmail.com. Send me an email. Ask for the expected move box. It's $20. I'll send you the link for it. Inside of the purchase for $20, all I need is your user ID. So if you want TradingView, this Chris Pulver with no spaces, that's my user ID. So if you want it on Thinkorswim, I have a grid share link that will just bring up its own chart that you can have and save it as a workspace or save it as a grid. That way, it doesn't take away any of the work you have on your Thinkorswim charts. But if you want to have it for TradingView, I just need this profile name at the top, and I can easily add that access. Okay, let me find your email. I'll just send you that reply email again. That has both, right? It has the Thinkorswim plus the video link. Okay, Alan, you got the video link. Yeah, Chris Pulver Pub. Chris Pulver Pub at gmail.com. And just like I said, subject, just put in expected move box and I'll send you the link for it. And it's $20. Yep, I gotcha. Okay, good stuff there. Couple more things. Let's see. Waterfall income. We got a nice trade yesterday. Did anyone get filled on waterfall income? I still have pending orders for my managed accounts. They didn't get filled at 50 cents. Let me double check that from yesterday. I got filled at 50 cents. Yeah, that was so stupid. I got filled at 50 cents yesterday. That's why I put in the trade. It's probably hanging out at like 40 to 45 cents. I would just leave it. I think the trade's fine. It's good structure. We're trading around that 6,000 handle. The week is not over. Now, I guess I'll ask everyone a question here. Do you think that FOMC tomorrow is going to be a boost for stocks or not? It could be a big noisy day. But I would imagine that we're probably not going to see tons and tons of upside with FOMC. Structure wise, right now, the market is still making lower highs and lower lows, lower highs and lower lows. So I would be very careful and cautious of this. Okay. That's just some trend line analysis. If we go support, 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 and we do this for this week, gap up and pause, run up into this. Guess what? Would anybody be surprised tomorrow if we test 6,800 and we fall? Show of hands, right? I wouldn't be surprised if this structure is going to hit what is support to become resistance and the market pulls back into these lows. Now, what would have to be said tomorrow for FOMC? I don't know. I don't think the market even cares what Powell's going to say. I'm just watching some technicals because this will tell us that the bears are still lingering in the background if price is going to be defending the 6,800 handle. Okay. If price is above 6,800, if we get better than 68 and we stay up in this area, then yeah, we go to 68, 68.50. I would say that the bulls have probably put in a convincing case to maybe put in a low. And then the market, just again fights around. It's like we're so far away from 7,000 right now that to me the near term play is if we, run up into some resistance and we turn south, like 6,800 is kind of the critical spot where the bears could step right back in and smash it lower. Okay. So if that is the case by Wednesday, let's say Wednesday is a day where the market is up here towards 6,800 and then it sells off through Thursday and Friday, is it possible that we come back into this like 65.50 zone or break some fresh lows? It's possible. So I think we just approach it one day at a time. Let's see what tomorrow looks like. Let's see what FOMC looks like. Let's trade Thursday, Friday. Let's just be aware. Okay. All right. So just some technicals there. Are you keeping the $1.50 pending on the puts? Yeah, for the $1.50, Sharita, on the put side, yes, I'm keeping those pending. You're talking about the put spreads, right? Yeah, my put spreads down here at 66.25. They're still pending for $1.50. So how are those going to get filled? Well, if price is going to roll over here, it's possible that this starts showing more credit. So I've got them pending for $1.50. I think they're far enough out of the money that even if it was offering over $1, I might still take the trade. $1.50 is a little bit better. Okay. But I'll keep an eye on that. If price just does this, for the next hour or two and it goes next to nowhere, then this doesn't get filled and I'll walk away with about $105 on the day. And that's okay. It would have been nicer to get filled at like $1.80, $1.90, or $2 on my bear call spread because I'll be much happier taking most of that profit out early versus I got filled immediately at the $1.55. And, it is what it is. But I'm glad a lot of you got better fills than I did. Powell's last meeting is May. Yeah, I know. But he's still talking tomorrow, so we'll see what he says. And honestly, he's probably going to duck a lot of questions when it comes to, Warsh and the new Fed and are you going to stay on as governor and blah, blah, blah. He's going to avoid all that stuff. I'm pretty sure he's not going to talk about that. So whether the market uses that as something, I mean, price wise tomorrow, I don't know. Probably not. He won't. I don't think he's that guy. Just to spite, he won't. I think Powell is. I think he's a little bit more of a. I don't know. I think he's got a little bit more integrity than that. We'll see. Yeah, so if he takes the high road and doesn't really say much and just gets away from all the jabby proby questions, then it might be a very lackluster FOMC. But he'll probably acknowledge maybe oil prices, maybe the shock, geopolitical tensions, like things like that are very on the surface that are very obvious, and the market may move around with that, good or bad. I would imagine bad. If we're marking, hey, look, inflation because of what's happening in the Middle East right now, oil prices, blah blah blah. There could be a bit of an inflation shock, or could be short term. I don't know. I don't know. I'm not Jerome Powell. I don't have the canned script. It wouldn't surprise me if it's very much exactly what he's been reading the last couple months. He's just now like a cadence of he just says the same stuff, and he'll avoid all the questions, right? And I'm sure he's probably better off just, walking away with some semblance of a legacy. I don't know what that is. I know that he's received a lot of criticism these last 6-12 months. Um, even from some of the smarter people macro wise that I respect out there, they've been giving the Fed a lot of criticism. And one thing I will say about the Fed is the Fed was never built to be proactive ever. So the fact that we're treating the Fed now like they need to be this proactive entity, they're never that. The Fed has only acted when needed as a critical backstop to the markets, needing the extra boost and needing the extra backstop. So the fact that they've been criticized, it's like I get it. Like there's lagging data, things need to evolve. Maybe they change a little bit. Maybe there's different metrics that'll pull things in faster for them. But for the most part, I would say the Fed is still going to be, reactive. I just want to maintain some type of Fed independence. I feel like that's the biggest threat right now is looking at the Fed is it's just a ultimately like a yes entity to the president at least until midterms. And we'll see how midterms go. So anyway, and I'm sure Powell will be just fine. Whether he does, I mean, Janet Yellen's doing just fine. I mean, any Fed chair I'm sure is doing fine. So I mean, I happen to think he was fine. It certainly hasn't been an easy time to navigate, but between you know Volmageddon events in 2018 and 19, a crisis in 2020, a bear market in 2022, inflation, deflation, a vocal president now, it's a lot, and the Fed is just like we're supposed to be an independent entity that doesn't jump in and proactively solve things, but ultimately, that means that you're late. You're late to the game. You're late to policy shifts, and then you have this roller coaster ride of it's too late, it's too early, not enough, it's too much. But I mean, there's QE right now. We have mild QE. There's stability in the markets. We're talking about all this churning and dispersion happening while the markets are only a couple percent away from all time highs. So whatever. All right, let's do this. While we're hanging out here, I do have a session to run for double up alerts. If you'd like to hang out and watch that, these are trades that are all about low risk, high reward. And I look to find these trades on SPY, QQQ, or SPX. We have a trade running this week. There's two of them actually, and the one that I put in yesterday for double alerts could be very good. It might be cheaper than what I took it for yesterday. I took a trade for, I think you could pay up to $2,500. I risked $70. So it's they're all setups that are only based around could I get a high reward, low risk trade? And I don't think the top one around 7,200 is going to work unless we have just a massive surge in the next couple of days, which I'd be really shocked to see that. But I think 6,550 is very doable. I think 6,600 is very doable. So if we hit those levels, that could offer up some profit by Thursday, Friday. If so, certainly enough to cover the fact that I traded both directions. And point is between SPY, QQQ, SPX, XSP, index related tickers, DIA, IWM, or even now taking your top 10 stocks, which now have expirations on Mondays and Wednesdays and Fridays. There's a lot of these opportunities you can see with double up alerts. Okay. So, Deanna, if you are ready, let's fire that up from yesterday. Okay, very good. And let's see here. Tomorrow is today. Today's Tuesday, right? Yeah. Okay. Okay. All right, let's fire this up, and Deanna and I will be here answering questions. And I'll keep an eye on everything for daily profit play, and just look for Telegram updates, and we'll continue to trade the day. So, all right, see you soon.